This week is packed with important events for the US dollar, and in this video we'll discuss how we can prepare for these upcoming events. Hey guys, it's Arnie here from Forex Source, where we help you to trade and understand the currency markets better. Now guys, on this channel we do a lot of educational trading content specializing in fundamental analysis. So if you're new here, definitely consider subscribing. Guys, welcome to another week ahead video. Now this week ahead video will cover the trading week from the 29th of July to the 2nd of August 2019. And we have back-to-back events for the US dollar which can provide us with some great trading opportunities. We have Core PCE scheduled for Tuesday. We have the very important and highly anticipated FOMC meeting scheduled for Wednesday. We have ISM Manufacturing PMI on Thursday. And then we're going to finish it all off with Nonfarm Payrolls on Friday. So stay tuned to this video to see how we can prepare and possibly trade these upcoming events. Okay guys, now our main focus point for this week is a possible trading opportunity on the US dollar. We've got a couple of very interesting data points scheduled for this week. It'll start with Tuesday's Core PCE numbers coming up. Then we have Wednesday's FOMC meeting. Now in terms of the Core PCE on Tuesday, we know persistently low inflation was one of the Fed's main reasons for looking into cutting interest rates in July. So any big deviations in the core PCE number can really set the tone for the dollar in the build-up to that FOMC meeting, which we have on Wednesday. Now, this is followed by ISM Manufacturing PMI on Thursday, and finally finished off with the good old non-farm payroll scheduled on Friday. Now, we've added the expectations for these events for you guys, so you can just go through these numbers and make sure that you know what the markets are expecting before these important events hit the wires. Now, the market's main focus for this week will certainly be the highly anticipated rate cut by the Federal Reserve. Now, this rate cut will be the first cut for the Fed after they began their hiking cycle back in 2015. And what makes this meeting a little bit of a tricky one for the Fed is the fact that the US has had a string of very positive data recently, including better than expected wage growth, better than expected payrolls, CPI, retail sales, and more recently on Friday, we had solid GDP numbers coming out for quarter two. Now, the markets are widely expecting the Fed to cut interest rates by 25 basis points, which is currently priced in at 78.6% probability according to CME Group at the time of recording this video. Now, it is important here, guys, to note that about a quarter of market analysts still expect the Fed to come out aggressive this week with a 50 basis point cut. But given the more upbeat data, that seems very unlikely to happen. Also remember that the St. Louis Fed, James Bullard, who is a known dove, was the only Fed member who voted for a rate cut at the June meeting. And he aligned or realigned the markets back to a 25 basis point cut when he said last week that he would like to go for a 25 basis point cut at the upcoming meeting. So with a 25 basis point cut basically fully priced in and expected by the majority of market participants, what will the market be looking for in this meeting? Now, the main focus will definitely turn to forward guidance as to whether the Fed expects further rate cuts in the near to medium term horizon, or whether this hike will only serve as an insurance cut against a slowing local as well as a global economy. Now, the idea of a one and done or insurance cut is not really a new idea when it comes to the Fed. We've seen similar cuts performed by the Fed in both 1995 as well as 1998 when similar economic fears gripped the markets as well. So a one and done cut isn't really something that'll be outlandish for the Fed to do. It's important to note that the markets are currently pricing in or anticipating an extra or a total of 100 basis points of rate cuts by the Fed by the end of 2020. But if you guys remember, the Fed's own median forecast of FOMC members at the June meeting had no cuts showing for this year and only one cut in 2020. So all in all, it seems like the markets has been a little bit aggressive in the expectations at least for now. Now, with the recent string of positive data in mind, the market has been very aggressive in the dovish expectations of the Fed. Thus, the biggest reaction and opportunity for this week would be a positive surprise in terms of the data we have, and the Fed, which possibly signals a turn to a more neutral policy stance and a more data-dependent policy stance after this week's meeting, which could offer us a great opportunity to buy the dollar. Now, it's also important for us just to keep note that, guys, that if the Fed does come out extremely dovish and confirm basically that additional rate cuts will be taking place for the rest of the year and through 2020, and if they mention that they will start a more aggressive easing, to implement more aggressive easing measures, that can still be a great opportunity to sell the dollar at market. So we really do need to be careful of what the statement says about the forward guidance, as that will be the main focus for the FOMC for this week. Now, the best case scenario for a sustained move in the dollar will be congruence in the data events this week. So if the important data this week comes out very mixed, so let's say we have a bad PCE number, and then we have a good ISM, and then we have a bad non-farms. You guys get the picture. If we have mixed data, that would really reduce the conviction of this trade on the dollar this week. So if we are going to look for a sustained move, we would like all of the information, all of the data, as well as the FOMC meeting, for everything to be pointing in the same direction. Now, guys, now that we understand why we are going to be focusing on the US dollar this week, we can move on to the charts and look at some of the technicals. Now, in case we continue that trend of recent positive data releases, if we see that continues into this week with the PCE, with the ISM, as well as the non-farm payrolls, and if the Fed disappoints the markets with a more neutral stance after this rate cut, we could pair the US dollar. We could look for some US dollar longs and pair that against something like the Kiwi dollar. Now, recently, there's been more and more investment banks that have increased their rate cut expectations for the RBNZ, with some of these banks now expecting 2 more cuts in 2019, with the first one expected as early as next month in August. Also, there's been reports that the RBNZ is conducting research into unconventional monetary policy, which has basically raised the speculation that the RBNZ might consider quantitative easing in the future. So all of this should keep the outlook of the Kiwi dollar bearish in the short and medium term. So if we do see some bullish potential coming into the US dollar, we could definitely look to pair that with something like the Kiwi dollar. Okay, guys, so turning to the charts and looking at the NZDUSD, we can see that the pair came very close to that 66 handle on Friday after we saw the solid GDP numbers for the US. Now, in terms of a trade on this pair, we'd like to see some sort of a pullback before looking at a short entry on the pair. And if we use our Fibonacci retracement tool like we have here, from the swing high close to the 68 handle to the swing low here close to the 66, we can see that we do have nice confluence with the 38.2 fib and the 50% fib, as well as the 0.67 handle. So this looks like a very interesting shorting area if the pair does move back into the zone over here. Now, in terms of a stop, guys, we can anchor our stop probably just above this swing point, which will place it just above the 0.68 handle. But just above that, at the 68.20, we have significant order flows for offers in the market. So the safest place for a stop loss would be just above that 0.6820 level. Then, guys, if we use our Fibonacci expansion tool looking for a possible profit target, we can see that we do have a confluence over here with the 61.8% expansion level, which comes in very close to that 0.66 handle on the chart as an option, especially since this blue line over here shows recent order flows placing significant bids at the 66.10. So that can be a possible first target for the pair. But we also have the significant daily support. If I just quickly zoom out, we can see here at the 65 handle, we have significant support coming in at the 65, the 0.65 handle. So that can also be a possible target, potential area to take some profit if we do get into a short trade on the Kiwi US dollar. Question of the day, guys. Is there anything about the fundamentals that you would like to understand better and would like us to make a video about? Please let us know in the comment section below. And also, if you find our videos helpful, please remember to click that like button to let us know. We wish every one of you a profitable trading week ahead. Cheers.